Good morning, ladies and gentlemen. Welcome to today's webinar. I'm in command today, your pilot. My name is Dave Beattie. I'm the Legislative and Compliance Manager at HR Talk. I'll be talking you through workmen's compensation / COID, and we're also going to briefly touch on IOD claims. So I'm going to talk to you about some legislative issues, and I'm going to also talk to you about some practicalities as we go along. Sorry about that, just a brief technical issue. Okay, so to start, what does COID stand for? COID is compensation for occupational injuries and diseases, otherwise known as workmen's compensation. Most people refer to it as workmen's compensation, but obviously the Commissioner refers to it as COID. What is the purpose of COID? Any business employing their first employee, and that does not include directors, is required to register for workmen's compensation within 7 days. Practical challenges that we often have is that the registration process it involves employees. A lot of directors are working directors, so there is a little bit of confusion as to if you are a director and the only employee, whether you would work for, you'd be required to register for workmen's compensation. Workmen's compensation provides cover to employees who get injured on duty. They may get disabled on duty, or they may even die on duty. You'd be covered, the employee would be covered on all those issues. And it also covers diseases that might occur in the workplace. I think of asbestosis, working on a mine. If you got that disease, you would be covered for workmen's compensation purposes. Who cannot apply for COID? You cannot apply for COID if you do not have at least one employee who is not a director or shareholder of the company, as previously mentioned, or if you're a sole trader and you do not have any employees working for you. Often, a sole trader will register as such due to the simplicity of trading as a sole trader. As soon as you employ your first employee as a sole trader, you are required to register. What is the CF registration number? Your CF registration number is your workmen's compensation / COID number, and you'll notice that it starts with a 99 000, and then you will have 7 unique numbers after that. That's the number that must be used in all correspondence, or particularly as the reference, should you be making a provisional or annual payment. Do you have to register each company for COID, whether it's a branch of an existing company or a new company? Yes. As long as they got more than 1 employee, they must be registered for COID. Each company would have its own registration number. And this is particularly a case if all those entities do different things. We're going to talk about risk just now, but each of those must have their own COID number. What is the form to be used for COID registration? So now you've got 2 forms. Until November 2020, you only had 1 form, and that form was called the WAS2. That form was for registering an employer, and at that point, domestics were specifically excluded. But now, as of November 2020, if you're the employer of a domestic, you are required to register for workmen's compensation, and you would fill in the form CF1E. As I said, it's a new form. Unlike the WAS2 form, it requires the employee's details. So your WAS2 form is a form that just generally for your company has blanket totals and an employee number. So if you've got 36 employees and your leviable remuneration is 10 million, that's what you would put on the form. Whereas with your domestic, I think it's on page 3, there is the employee-specific details. So if there was an issue that required a claim, you would only be covered as a domestic employer if those employees' details had been supplied to workman's compensation. Obviously, workman's compensation for companies is a little bit more blanket, but I urge you to include everyone who needs to be included, because recent audits have looked at numbers to payroll, and I very much doubt you're going to be covered by workman's compensation if an employee who's not on the payroll or not on previous declarations is injured or dies. Should the application be done online? Now, the politically correct answer here is yes. In an ideal world, it is better to do all the registrations using online systems. I've had challenges with the online system in terms of the correct category that the employer has been put on. And as a company, we've taken the stance of utilizing a professional company in the space. So we use a third-party company that actually works with workman's compensation to do the registrations, obviously at a fee. And they provide valuable insights into the provisional declaration in terms of what we must reflect on the application form. And secondly, what should be paid in terms of the risk category and the declaration in terms of what the company does. Registrations can also be done through a company called Rand Mutual Assurance. Now, if you trade in the class 4 mining or the class 13 iron and steel industries, you are required to register with Rand Mutual Assurance. You register with workman's compensation first, and then you do a parallel registration with Rand Mutual Assurance. And all your administration and registration, so your registration and annual administration goes through RMA. They're much more efficient and they provide good training around the country. So just remember that if you are in those categories, you need to do the dual registration, but you're welcome to contact us if you've got any questions. Then you've also got Federated Employers Mutual Assurance Company, otherwise known as FEM. They work in the construction space. So often clients will ask me whether they need to be registered for workman's compensation. I find out if they're registered with FEM, and they are, then they are good to go. How's the COID subclass and rate determined? Okay, so very importantly, when you do your initial registration, I urge you to be very, very clear in terms of what you do. Writing some obscure one-liner that you might understand what the company does may not be understood by workman's compensation. And the challenge is getting allocated a wrong category can be a 3-year correction process. So be very, very clear. Remember that workman's comp is based on the services and the services you provide or the products that you sell. Workman's compensation will look at the risk associated with that process, and then they will allocate you based on the subclass a rate. Okay, now I just want to give you an example. As the rates that you allocated will have an impact on how much you pay. So if you work in the mining industry, you're going to get a very much higher rate because of the risk of injury and disease to someone who works in an accounting office, where the worst thing that can happen is maybe a paper cut or a fall, okay, on site. So I think it's also important to even go deeper. A lot of our clients work in the logistics industry. Now, as soon as workman's compensation see logistics, they think of trucks and they think of deliveries and they think of warehouses and forklifts. So there's risk. But a lot of those clients work in the administrative side of logistics. So companies, for example, that have offices where people sit with banks of computers, and issue directions to trucking companies all around the world and to the shipping industry as to where containers must go, would have a very much less risky work environment than a logistics company. So what I'm saying is when you're doing your registration, it's important to say we work in the administrative side of the logistics industry. We do not own trucks. We do not do deliveries. So that it's very, very clear to the compensation commissioner that you should be in a much lower risk category. As I said, once you allocated a rate, the compensation commissioner is going to go and say that rate is going to be applied to the expected leviable income for the year, and you're going to get what they call a provisional assessment. That provisional assessment has to be paid within 30 days and would be obviously offset against your annual return when you do it at the end of the year. We'll discuss that in depth later. So what is included in COID earnings? I've got the bullet points there. Salaries and wages, cost of living allowances, bonuses, regular overtime, guaranteed 13th check, housing allowance, commissions paid in addition to basic pay, accommodation and meals, and any other payments in terms of an employment contract. But what's important to take away from this slide is you can see these are all items that are regular. So note that if something is regular, it must be set up in your payroll. It must be flagged as a COID earnings. So a guaranteed 13th check would be very different to the company that very seldom paid a 13th check and periodically paid it. If it's not guaranteed, it's not included in COID earnings. Similarly, what's excluded from COID earnings, reimbursements, reimbursement of travel, food, accommodation, subsistence, occasional overtime because it's not regular, any ex gratia payments on termination, so any occasional payments. Very importantly, company contributions. So those of you in payroll will know that company contributions to pension, provident, medical are fringe benefits and would be included in taxable income. They wouldn't be included for COID purposes. And then obviously any non-recurring payments. So just to summarize, regular payments included, irregular payments excluded. Is there an annual COID earnings threshold per person? Yes, there is. Every year we sit with bated breath, normally till the 11th hour, for the Minister of Employment and Labour to publish this amount in the Government Gazette. Why is it important? Because it has to be put into the payroll. And as you know, your tax year is 1 March to 28 or 29 February. So it's important to put that in. Your COID assessment year is also for the same period, even though it's called a different year. But it's important that that threshold be put in, and that the threshold is currently 506,473. So why is that threshold important? It means that the maximum earnings that COID leviable earnings can be based on for an employee is that 506,473. So if you're earning R1 million a year, your payroll system will automatically limit your COID leviable remuneration to 506,473. So you'll have payroll systems have COID reports, and you'll see on that report it'll show your actual earnings, and then it'll show your COID earnings. If you have your COID risk percentage, you can put that in, and then what it will do in the payroll, it will provide a running total of what your COID liability for the year is expected to be. Let's go back to the provisional return of earnings. After receiving your COID registration number, immediately you're required to lodge provisional return of earnings. It's actually done automatically by the Compensation Commissioner. And as I said, what they do is they take the sub-rate, the risk percentage that you've been allocated according to the riskiness of your business, and they multiply that by the leviable earnings that you've provided. I'm really told by our service provider not to overestimate that, as it ends up you paying the Compensation Commissioner too much in advance. I tend to try and be as exact as possible so that there isn't a surprise when you submit your annual return of earnings, but the specialists in this area say that you should rather under-provide. That's up to you. Immediately, once this assessment is raised, you as the employer have 30 days to make this payment. Make the payment with the correct reference number, otherwise it will be allocated to someone else, and that will take 3 to 5 years to fix. So dealing with these people is tough, and you need to make sure that you get this right first time. So check it 100 times before you submit it. As soon as you've submitted it, you can apply for a letter of good standing, and that letter of good standing is very valuable in terms of the tendering process. Now, at the end of the year, you come to do your annual return of earnings. Traditionally, the 31st of, well, not traditionally, the deadline is the 31st of March, but in my career, every year that has been changed to 31st of May. So by the 31st of May, you as an employer have to submit a return of earnings on a WAS-8 form. And what that does is you're essentially taking your COID report out of payroll for the period 1 March to 28 Feb, and you multiplying that by your risk percentage, and you're making a provision for the next 12 months. So you can use your COID earnings, add 5% for the next expected year, and then an assessment will be raised. If you've done a provisional assessment in a year where you've just registered, obviously that provisional assessment will be offset against your annual return of earnings. But once you're up and running, you're making one payment a year, and that has to be done. That has to be paid within 30 days of the assessment being raised using the correct reference. And once again, you would apply for your letter of good standing. Is there a minimum assessment value? Yes, there is. If your company is just starting out and you might have, let's just use an example, you might be a sole trader and you've just got a little PA working for you, and your only leviable income is that PA's salary. When you multiply that leviable income by your rate, you might get a value that is less than what they call the current minimum fee. So let's just say your calculation comes to 820 Rand. You'll see when your assessment comes that you have been levied the minimum according to legislation, which is 1284. Don't be surprised, that is just the legislation, so you have to pay that. Now, when domestics were added to the definition of employee and included in COID registration, we were very concerned that your homeowner would be levied with an additional levy of 1284. You know, that's quite high value, considering that some people required to register for COID only employ someone for 1 day a week. So there was consultation with the Compensation Commissioner, and they've introduced the minimum rate for domestic employees for 381 Rand. Now, I've looked at some of my clients in the space of employing someone for 1 day a week, and 381 Rand is reasonable in that space. It's important to note that the employer's accidental costs during the year of assessment may be higher than the industry. You might then get an assessment increase. So if you are in the space of not monitoring safety in your workplace and there are incidents, you are going to pay in terms of this levy. Who needs a letter of good standing for COID? I would say that everyone should have a letter of good standing, whether that be for tendering purposes or whether that just be for keeping it handy to show that you are compliant and to be able to put in the face of a labour inspector should they come to check. They are checking. There's permanent sort of crackdowns, largely per area. I know they were at Mshlanga Ridge in November, so it's good to be compliant in this space. As I've said, most tenders now, government tenders definitely require a letter of good standing, and having the letter of good standing will know that you can send your employee to a private hospital with a clear conscience, knowing that they're going to get treated. And very critically, registering for workman's compensation takes civil lawsuits against the company off the table. Once you're registered with workman's compensation, they take over all responsibility for injuries, deaths, and diseases in the workplace. And if you obviously are not compliant in the safety place, the Department of Labour will take you on separately, but you cannot be sued by that employee in court for a civil payout due to negligence. The Department of Labour Compensation Commissioner takes over all responsibility, and any payouts will follow a very prescribed formula. And we will cover that a bit later. Do you have to apply for a letter of good standing? Yes. It's a very, very simple process, and it's important to note that that letter is only applicable until you're responsible for your next return of earnings. And as you know, it's best to wait for that return of earnings to be submitted and then get your letter of good standing for the next year. So how does it work? It works essentially the same way as insurance does. So it provides you with basic benefits, and those benefits are published in the Act every single year. If you're injured on duty, there's a process which we will cover, but you will be taken to a facility and you will get medical care. You'll also be covered for your loss of wages, which we will discuss in detail a bit later. So COID covers the employer and the employee, no matter whose fault it is. And as I said, you cannot be, as the employer, you cannot be sued. So I think look at it this way, it's like any insurance. You don't insure your car and you're in an accident, you're responsible for paying the bank back the value of the outstanding balance in your car, and you'd be responsible for the damages to any third party's car. So the cost of that could be monstrous if you hit a Ferrari or Bentley. So it is a small price to pay your COID liability once a year, knowing that you cannot be sued. So the types of COID compensation, medical costs. So basically, if there was an injury or an illness, that would cover hospitalization, doctors and specialists in medicine. The employee is free to choose the medical provider that they want, but in reality, I know in Durban, there's only certain hospitals that will actually take you. And the reason that is because of the delay in payments that hospitals face when they're dealing with government and workman's compensation. All medical accounts will be submitted to the Commissioner for payments. The fees are paid to a maximum COID tariff, very much like your medical aid would. Those are published annually, and there's no co-payments, so you don't have to have gap cover. Temporary disability. Okay, so basically temporary disability, you're unable to work. You might be able to do limited work, but after treatment, you can be sent back to your workplace. So to claim temporary disability, you have to be off, booked off by a doctor for more than 3 working days. If you're booked off longer than that, you'll get paid out for the whole time that you're unable to work, including those first 3 days. If the employee can't work at all, they'll get paid out 75% of their normal monthly wages tax-free. This is known as the days off or income replacement benefit. If the employee can only do some of their work and will get paid, the fund would pay them 75% of the difference between what they get paid and what they would have been paid before the injury. So you're not going to get more than 75% of your normal earnings should you be disabled or paid out in terms of this fund. So your claim is limited for temporary disability to 1 year, but you know there are often cases where treatments and cases drag on, so you can by application extend that to 2 years. When it starts getting to 2 years longer, then obviously the commissioner is going to have to look into this to determine whether this is a permanent disability and what compensation has to be granted. For the first 3 months of work, the employer must pay the employee compensation. It can be quite a challenge, obviously, from a cash flow perspective, if you've got more than one person off sick or injured. The employer can claim this money back, but the timing difference obviously can hurt your cash flow. After 3 months, the compensation commissioner takes over payments until the employee is fit to return to work. Once again, whether that happens on time is another thing, and whether you enter into some sort of arrangement to try and help your employee out is another story. For any occupational disease, the employee will be paid the wage at the time of diagnosis and not the time when the employee acquired the disease. So that will potentially be at a higher rate than what they were initially earning. If the employee is now unemployed, the wage to be used would be the wage that they were earning while they were still in your employ. In that makes sense. In terms of permanent disability, such a disability is one that means that you're unable to return to work, losing an eye, losing multiple limbs, blindness would definitely fall into those categories. The Department of Labour have a rating between 100% and 1% in terms of the seriousness of your disability. And the example I've used is 100% would be blindness, loss of limbs. But if you lost a small toe, you would obviously get a much smaller disability payment. The employee's doctor would write a medical report about the disability, very much like you do for your income tax, for your DD form and income tax. And between the doctors and the commissioner, they'll decide in terms of the seriousness of this disability and how you would be paid. There is a schedule called Schedule 2 in the Coida legislation that will provide you with a guideline in terms of the breakdown of these contributions, percentages. If the disability is more than a 30% disability, the employee will be paid a monthly pension. The size will depend on what your earnings were and the seriousness of the disability. And as I said before, if you've got 100% disability, you're not going to get 100% of your pay. You're going to get a maximum of 75%. If the disability is less serious, there will be some sort of consideration, and then they'll work out the monthly payments, and that's what you would receive for the rest of your life. If the disability is less than 30%, the employee will get paid a lump sum as a once-off payment. In terms of death benefits, if you're killed by an occupational injury or disease, your family can make a claim. And what I've done is I've listed the benefits there. The once-off lump sum payable to the spouse is 2 months compensation benefits. Then there's a monthly pension to the spouse, 40% of their spouse's previous earnings. Monthly pension to the children is 20% of that monthly pension until they're 18. And then there's a once-off pension benefit that is published in the Gazette annually. Children mentioned include illegitimate, adopted, and stepchildren. If there's no spouse, other dependents like your parents will be paid compensation. In terms of additional benefits, if a worker is injured, dies, or acquires occupational disease because of negligence of the employer, the worker will get extra compensation for temporary or permanent disability. If the worker is under 26 years of age, they'll get an additional compensation. And additional compensation is claimed on Form W930 and must be submitted within 24 months of injury. So obviously they're covering themselves there for claims that come out of the woodwork. Important that you as an employer obviously meet your contractual obligations to the employee by providing a safe workspace. Okay, so the definition of injury on duty or occupational disease, I've listed it there. It's the unexpected occurrence at a specific date, time, or place, arising out of the employment, resulting in injury or death, or if it's an occupational disease, it's due to your exposure to certain conditions in your workplace. And I've included this because a lot of people do not know this. Compensation is paid to workers, trainees, apprentices who are injured or acquire disease in the workplace. So it does cover trainees. You must be permanently employed. And as I said, domestic workers have been included. It includes an apprentice or trainee, a worker paid by a labour agency. Now, just, there's some grey areas here. And, they talk about permanently employed. A lot of people have casuals that are effectively permanently employed. So you would be making a mistake if you do not include those casuals on your COID leviable income, because you're going to be dragged to the CCMA and potentially suffer a civil lawsuit if that person can prove that they, in terms of labour legislation, work more than 24 hours a month, are effectively permanent, and you've just, for whatever reason, not put them permanently onto payroll or denied them benefits that all permanent employees would get. You cannot claim if you're a South African National Defence Force member, you're in the police services, you're working for a subcontractor, so you're not in the actual employer of the company. Also very, very dodgy area. There's lots of challenges in this space where is the subcontractor independent, so just you need to do your homework in terms of who your employees actually are. If you've worked outside South Africa for more than 12 months, it's very, very important that you actually communicate this with the Department of Labour and the Compensation Commissioner. You need them to understand that you are going to be going out of the country, and it's become more popular for South African companies to send people overseas on long-term assignments. So make sure that you're in touch with and you're on the same page with the Compensation Commissioner. You cannot claim if you found guilty of willful misconduct unless you're seriously disabled or killed. Okay, moving on. You'll also not be paid if you report the accident more than 12 months after the accident or the injury, the disease or death. Okay, you obviously will not be paid if you work for less than 3 days, as we've previously discussed. The accident resulted from your own negligence or wrongdoing, unless you are seriously disabled or die. The fund will obviously, in that case, still pay compensation to your family, or you obviously unreasonably refuse or willfully neglect to have medical treatment. So it's critical that you, as soon as it happens, my advice, in that same few days, it must be reported. Now, I've included quite an interesting one, and I'd like to give credit to advocates Reynald Luch and Deline Sheesby here, because this is an area of legislation that's untested. What happens if you're injured while working at home? Now, bear in mind the COVID restrictions and civil unrest. We were all dispatched to our places of residence to work. Now, the challenges that you have, and I'm going to let you read this in your own time because it follows a process, but very, very basically, when you work in a work environment, your employer has got a responsibility in terms of Occupational Health and Safety Act to provide a safe workspace. So if you go into any offices, you'll see all the signs, you'll see all the warnings, etc., the markings on the ground, the signs, the railings. Obviously, that is audited and reviewed quarterly by the safety committee. At your home, your employer doesn't have such rights. Your employer does not have the right to come into your home and start dictating health and safety. It's your home. Now, most of you should have obviously a safe environment, but I'm sure there's homesteads, particularly in the informal communities, where electrical connections might not be to code, or they might be illegal connections. If you got shot to death while working at home due to a legal connection, I very much doubt Workmen's Compensation are going to entertain that claim. Now, due to the slow nature of these types of incidents to be resolved, there's no court cases at the moment. So we haven't been able to test how they would work, but the advice that we received is put in a claim and let's see what happens. The professionals believe they will not be entertained because it would be very hard to prove that you fell down the stairs, as an example at home. The fact that you got a broken arm and leg might have happened at football training last night or while you were running recreation. So unless there was a video of you falling at home or some sort of third-party affidavit to say that they saw what happened, there's very little chance that you are going to qualify for a payment. There is the option of obviously your employer coming there and doing some sort of evaluation, but still, what we're saying is, at this point, don't count on the employee getting a claim. Put it out there that the employee has a responsibility to maintain a safe work environments at home, and maybe include that in your policy, and maybe include in the policy that you can't guarantee the fact that these people would get a claim. Okay, reporting and claims process. Now, this is not my area of expertise, but HR Talk does provide the service. Our HR team will gladly assist you, so I'm going to quickly just go through this. The employee must report the injuries to their direct manager supervisor immediately. Once again, it's important to have a policy. Employees react better when there's a policy, so they know what their responsibilities are. The employer must report the accident within 7 days of an injury or 14 days after knowing of an occupational disease. The second one might be a challenge, if the disease is slow brewing and the employee is battling to get an answer to what they've got. The worker must get the WCR2 or 1 form from the employer and take it with him to the doctor. This would be completed and be handed back to the employer. The doctor must send a first medical report, the WCR4, detailing the disease and injury and the likely period the employee will be off work. The employer must send this report to the commissioner. The employee must keep copies of the employer's reports, records, evidence, and all notices sent to the commissioner. The doctor, obviously, if there was medical issues, disease, send progress reports while treatment is progressing. The doctor must send a final medical report stating that the employee is fit to return to work or that the employee is permanently disabled. And then obviously at that point, the commissioner will make the necessary decisions. The employer sends the final medical report to the commissioner. The employer sends the resumption report to the commissioner when the employee starts work again. The employer also fills in this form to claim back the compensation for those first 3 months where they were required to pay the money themselves. Once the compensation commissioner has all the forms, they'll make the payments. This can take months though, so you might, depending how nice you are, assist the employee with some sort of advance. Reporting an injury on duty, generally you would complete the employer's report on an accident, the WCL2. You would get a valid ID, driver's license, birth certificate from the employee. Relevant questionnaires relating to the specific incident. You would get a first medical report, as in the previous process, with a full clinical description by your medical practitioner of what's happened. For claims relating to post-traumatic distress, you would obviously involve a psychiatrist as well. I'm sure that's becoming more and more prevalent. Any other medical reports or information that could potentially impact on the commissioner's decision must also be provided. In the case of a needle prick or exposure to blood issue, there obviously must be the pathologist's report. Okay, and then yeah, that's basically very similar in terms of the process of an occupational disease histology and report. So, you know, my team say that the more that you provide, the better. So things like chest x-rays, lung function tests, all your lab tests, you know, audiologists, ENTs, so all of that would be important to put together this full medical report. And the more evidence, the better decision is made, the easier it is to determine the status of the individual and what the claim is going to be. Now, in terms of the process, our team will register on this site. They will register your claim for you, and they will follow up on the progress of the claim. You can obviously do it yourself, but our team are proficient and professional and have got a lot of experience in this place, and will also obviously prevent you from making mistakes. So if you're not supplying all the relevant information, our team will ensure that you have everything so that the claim is processed quickly. So what do we need from you? Obviously, any claim would be all the medical claims that we've chatted about, plus your CIPC company registration document, proof of business residence, proof of director residence, proof of residence of any designated employees, management, the ID of the director, the completed user nomination form, that's for us to act on your behalf, and the ID of the user. Let's go back to that. Those look very much like SARS requirements, but once again, it's very much a tick box exercise on behalf of our team, making sure that you're compliant and that there's no challenges. Now, that's basically that. I know that's it's very quick. You will get all the notes, and you're welcome to fire off any questions to us. I just want to look at the questions and answers. Johanna, I see a question from you. What is the payment details for Coida? Okay, so in terms of the payment, very, very easy. You on your actual provisional or annual assessment, on the bottom, it has all the details you could possibly require. So it will show you the account to which you have to pay, and what your reference must be. So there's really no excuse for messing that up. Use that bottom block. Check it 3 times that you're loading the payments correctly, and with your proof of payments, include a copy of the provisional assessment so that they can. You've got a second option for proving allocation. Zaria, if an individual operates out of a trust, can and should they be registered for Coida? Does that trust have employees? So once again, the trust can be registered for various reasons. Obviously, if it's just the trust and trustees, and the trust is operated for the benefits of certain peoples, no. But if your trust is a trading trust and there's employees, then you would have to register. What must we do if the Easy portal is experiencing technical difficulties? Very good question. I can pretty much guarantee you there are technical difficulties. You know, when SARS or the Department of Labour tells you about fantastic new online systems, I never get a warm, fuzzy feeling because of technical issues. Obviously, SARS are not as bad, but those of you who have dealt with the UIF compliance certificate system will know that it's down regularly, and that can be very frustrating if you need an urgent certificate for a tender. But I think if it's down for 7 days, I would do screen prints, and I would do an affidavit to say that you have tried your best to meet compliance and that they're in the wrong, and submit that all to the Department of Labour. We deal a lot with workmen's compensation, and we know how they are probably the worst government institution in this whole country. I also know that changing rates, changing addresses, changing anything with them is a process. Their audits can take years. That can impact on your ability to get a letter of good standing. And I do know of 2 companies that take them to the High Court every year to get a letter of good standing because their account is not up to date due to errors at the Department of Labour that they refuse to fix. Remember that these people are very suspicious. If you want to reduce your rates at all with the Department of Labour, they're going to make you provide an unbelievable amount of information. They might even ask you for a description of every single employee's responsibilities so that they can make a judgment. They think that you're trying to cheat them out of your COID levies. So, as I said to you, when you do the process in the beginning, do it very, very carefully. If your company over time changes what you do, you're going to have to go through the trauma, and it's potentially between 1 and 3 year trauma of hopping through hoops to get things changed. Yeah, everything will be submitted online. Our team will do everything for you. But obviously getting us to do it, what happens is we take over responsibility. We ask you for the information and then we take over the responsibility. Our team have relationships at these organizations that would be difficult for you to achieve. And where there's significant challenges, so for example, Shedri, your case, if they decline that, I would take that issue up on behalf of clients with the payroll authors group with the very highest level at the Department of Labour. It's clearly unfair that, you know, they're not allowing you to meet compliance. So, yeah, if you need help in that space, let me know. So that's it. As I said, if you need help, fire off emails to us and we will assist you. I'll point you in the right direction. The best way to contact us is info@hrtalk.co.za, and I will ensure that you get the best possible help. Thank you for your time today.
Sorry, Dave.
Yes.
I think it's Ndobek raised hand up. I think she wants or he wants to speak.
Okay, sure.
Let me allow.
Okay, sure.
Ntobeko can speak.
Now, is there any question?
Non-Ntobeko, because I see the hand is up.
Sorry, I don't have a hand up.
Yeah, I don't have a hand up either.
I see here your hand is up on my thing.
Sorry.
Okay, it's fine.
Okay, if there's any questions, please just send an email and I will get back to you the same day. So no questions will go unanswered. Okay, folks, that's all. Thank you so much. And I look forward to chatting to you all again. Please remember that we do these webinars every Wednesday. My next webinars will be in end of February when we talk about the budget, and then we will do legislative updates near the end of March. So that will cover PAYE, UIF, skills development, COID, and I'll do a couple of labor issues as well. So please book for those. And if you've missed any webinars, go to our website. They're all recorded and put there, and then let us know if you've got any questions. Thank you for your time and have a lovely day.